What up? What up? What up? What up? You already know who it is. It's your man, Boss Gang VIP. I am excited to be here with you today for the update to the new money public stock portfolio. These are the opportunities I get to show the new trades I've made. These are the opportunities where I get to hopefully inspire you, give you more confidence, and help you get on the right track to investing success. There is no right, there is no wrong. We just want you to be profitable. A lot of people believe in slow and steady. I believe in fast and steady. We've been doing very well with that so far. We want to see if we can keep that going. We're going to introduce a little bit of volatility and take advantage of some things that are to come in the future. As always, you're going to make sure you want to do your research, your due diligence when making any investment. And there's always a chance of loss. No one wants to lose. So we're going to try to make the best decisions so that we can make sure we're on the winning side and we can move fast and steady. If you haven't already, make sure to like the video and subscribe so you get the updates as soon as they drop. This is Boss Game VIP once again. And without further ado, we are going to get into the portfolio. This portfolio is public and it is 100% transparent. So today is June 6th, 2024. And if you guys notice, I haven't been on camera recently. I'm not really a camera person, but I notice people like to see me on camera. But I don't know. Maybe they don't. Maybe I look funny, and because I look funny, they like to look at that. I don't know, but if you want me to turn the camera on next time, put in the comments, turn it on. That's all you got to do. Put in the comments, turn it on. The dudes too, I won't feel any kind of way about it. I mean, no, come on. Yeah, turn it on. You want me to turn on the cameras? I'll turn on the cameras. Anyway, you'll notice something. The port is pretty much all the way at the top. Why is that? Because we continue to make new all-time highs. New all-time highs. Pretty good. We've only been at this. This is the start of the seventh month. Um, we're doing quite well. We're doing quite well. Let's show you what we did. Total contribution for 2024 was $300. Let's see. Wait, let's see. July 1st. Oh, we got some. Oh yeah, the pending dividends, right? The Coke EX date passed, but let's see. Contribution to Roth IRA, that from everyday checking, $100, and then Robinhood with the 1% match. Today, Palantir Technology market buy, put the full $100 into that, 4.132 shares, and Energy Fuels, ticker symbol UUUUU, 1.20 shares of that. We actually used the Robinhood match funds for that purpose, for that purchase. So let's see what we're looking like. As you can see, this is everything updated. Do your research on POTR, UUU, Coke, NU, JEPI, JPQ. Wanted to add some technology to the portfolio. Outside of just JEPQ, I wanted to find uh, an AI stock that had a lot of potential. Now, for the record, I have been in PLTR in my personal portfolio since about $7. So I've been in when it initially made the reversal. It made a reversal around 5.5, I believe, but I'm going to show you some things on as far as on the chart as well, that made this the right time for me, or gave me some confidence that at these levels was the right time to add. The previous month, we made the contribution to NU, and it has absolutely been on a tear, absolute tear. And because of that, the portfolio, quite a bit, quite a bit overweight to that, right? I mean, just on a complete tear. So we're going to definitely add to NU in the future, but we're going to add some different positions that I think have a chance to take off. And I'm actually hoping that I get some corrective activity on NU once it gets to maybe $13. See if it can push down to, I don't know, maybe retest like 11.66. And people were like, why do you want it to go down? Because I want to pay less. It actually got some upgrades today to around $15. Pretty interesting. Yeah, so it's been definitely going strong. So we want to keep this going. Again, we added POTR, UUU, and then I will get into some of the reasons behind the artificial intelligence that I like. I believe that PLTR is quite possibly the best artificial intelligence play that there ever will be. Do I know that to be true? Absolutely not. But I'm putting my money in because if I believe that there's a chance that it could be true. A lot of people are talking about semiconductors, as they should. Companies like NVIDIA, I'm an NVIDIA shareholder. AMD, Intel, these are all companies I absolutely love. Even smaller companies, UMC, uh, been in for quite a while, right? So definitely we need semiconductors. But I believe overall, artificial intelligence, I think the business with the most upside at this point right now is POTR. Now, from a PE ratio, the numbers are pretty high, but um, as long as the earnings continue to be strong and we see the growth, that should not be a problem whatsoever. Two up dividend watch portfolio summary. You can kind of see the current value. It's actually a little bit higher than this. You can see the volatility. We picked up a little bit in the volatility. We're going to balance that out, but that's plenty fine. I'm fine with that, but I definitely want to try to get that lower. Total return is saying 7.83%. Let's get into all of the holdings. Here you can see the price, the shares, showing the value, dividend, annual income, dividends. If you'll notice, dividends are going up. So even though we haven't actually purchased any more JEPI or JPQ, the dividends are going up simply because uh, the income is being reinvested. So as long as we continue to reinvest the dividends will go up, and we're absolutely going to be adding to these. And then we have the pending dividends for Coke. As far as diversification go, financial services, you could see because NU has been on such a tear, the weight has went really, really high. And I don't have any problem with that. The reason I don't have any problem with this is because the port is small. It's a small port right now. Right. So I don't have any problem with that. That is fine. We want to stay concentrated in a lot of circumstances. We don't have to do too much diversification. So I have no problem with that. ETFs, we have JEPI and JPQ right there. Tech, this is where we brought in the POTR. So we have obviously in JPQ tons of tech in there and all the good stuff that you want to own. We have some POTR here. Consumer defensive, uh, that's the Coke, and we got a little bit of energy, uranium with the starter position, and obviously we're going to add to that. One thing I like about Dividend Watch is a place where you can go and check out different articles, and so you can see articles here from June 23rd. Brilliant artificial intelligence AI stock up 48% in 2024, which is true. Buy now and hold for decades. I like the way that sounds now. Just because you see an article doesn't mean that you're supposed to buy something. Always do your research, but I definitely believe in PLTR, and a lot of people do as well. So a lot of people have their personal opinions. My personal opinion on anything is we want to build as much wealth as possible, simply because though a lot of people don't want to admit it, or don't like it, or don't think something should be a certain way, nothing is ever going to be free. Every month you're going to have to pay a mortgage. Every month, if you have a car note, you're going to have to pay. You're going to have to, nobody's going to give you groceries for free. The lights are not going to turn on for free, right? You're going to have to pay. And if you want to have anything in life, you're going to have to pay. My son graduated from the 8th grade the other day. We went to Dave and Buster's and we ordered two terrible hamburgers and some fries and a couple drinks, and spent about $70. So if you want to do anything in this world, you're going to have to pay. I am in California, so I'm not sure what the prices are in other places, but I imagine it is definitely high as well. So we're going to go ahead and get into some artificial intelligence. I'm on explodingtopics.com blog, AI statistics. Let's check it out. This is a list of up-to-date artificial intelligence stats for 2024, and this is Josh Howrath as of June 4th, 2024. From Chat GPT, autonomous vehicles. AI is one of the most exciting and controversial technology. Let me drink some water. Let me drink some water. I'm over here yapping. I gotta drink some water. Give me a sec. All right, here we go. How do I sound? I sound better to myself. All right, here we go. From Chat GPT to autonomous vehicles, AI is one of the most exciting and controversial technology trends happening in the 21st century. But how big is the AI space and how quickly is it growing? In this article, we'll take a closer look at key AI statistics along with growth projections for the future. Now, we're not going to go through everything in here, but we're going to go through certain sections of it. Top AI statistics. The global AI market is valued at over $196 billion. Number two, AI industry value is projected to increase by over 13x over the next 7 years. Keep these numbers in mind too, because we're going to get into some other things. But AI industry value is projected to increase by over 13x over the next 7 years. The U.S. AI market is forecast to reach $299.64 billion by 2026. The AI market is expanding at a CAGR of 38.1% between 2022 and 2023. CAGR, compounded annual growth rate. Compounded annual growth rate of 38.1%. Compounded annual growth rate. 38.1% between 2022 to 2030. Number five, by 2025, as many as 97 million people will work in the AI space. Number six, AI market size is expected to grow by at least 120% year over year. 120% year over year. 120% year over year. Keep these numbers in mind. 83% of companies can't claim that AI is a top priority in their business plan. Netflix makes 1 billion annually from automated personalized recommendations, those recommendations that pop up on your screen. Sometimes you like them, sometimes you don't. I don't have Netflix, so I don't know. Hey, I used to have Netflix when they had that whole borrowing thing. Yeah, they don't. Yeah. I used to wanna watch, like, Billions on Showtime and stuff. I don't know, whatever. 48% of businesses use some form of AI to utilize big data effectively. This number is obviously going to increase. 38% of medical providers use computers as part of their diagnosis. Artificial intelligence market size, the AI growth market is worth around 196.3 billion. As of the latest data available from 2023, the global AI market is worth 196.363 billion. That's an increase of around 60 billion since 2022. This is primarily thanks to increasing practical use cases of AI technology from content creation to self-driving cars. The global AI market is expected to reach 1.81 trillion by 2030. While the current AI market is sizable, it's set to grow by over 13x over the next decade or so. During this forecast period, the AI market is predicted to increase by a CAGR, compounded annual growth rate, of 38.1%. The AI software market's global annual revenue is currently over 50 billion. Global artificial intelligence software market revenue 2018 with the 2025 projections. We started, it's 10.1 billion in 2018, and 2025 we're at 126 billion. So what did we do? We 10x, over 10x, 12x. So yeah, about 12x in 10 years. Um, so that's what I really wanted to get into as far as this. So this is the software. This is where I believe that Palantir comes in, is the software. And that's what they do. Study the company, study the companies, what they are, study the leadership, who they are. Um, Again, I can't predict the future 10 years down the line, but we 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 have to take a chance sometime, right? And I'm going to take a chance on PLTR. Now, I wanted you guys to remember those numbers, the 13x, uh, all the different numbers, and you guys can rewind the video, write these things down if you need to. But I'm going to get into the rule of 72 investopedia.com terms. It's the rule of 72. So everybody has heard of it. If you haven't heard of it, not a problem. We'll get into it now. You will have heard of it. The rule of 72 definition, usefulness, and how to use it, by Will Kenton, updated March 31st, 2020, for Rule 72. What is the rule of 72? The rule of 72 is a quick, useful formula that is popularly used to estimate the number of years required to double the invested money at any given annual rate of return, right? So it's a rule. You want to see how long it would take to double your money, right? Okay, cool. Alternatively, it can compute the annual rate of compounded return from an investment given how many years it will take to double the investment. While calculators and spreadsheet programs like Microsoft Excel have functions to accurately calculate the precise time required to double the invested money, the rule of 72 comes in handy for mental calculations to quickly gauge an approximate value. For this reason, the rule of 72 is often taught to beginning investors as it is easy to comprehend and calculate. The Security and Exchange Commission also cites the rule of 72 in grade level financial literacy. So we're not getting too crazy. This is just the grade level stuff. Whether you knew it was or not, it is. Okay. The key takeaways they put: the rule of 72 is a simplified formula that calculates how long it'll take for an investor to double your money based on rate of return. The rule of 72 applies to compounded interest rates and is reasonably accurate for interest rates that fall in the range of 6 and 10%. The rule of 672 can be applied to anything that increases exponentially, such as GDP or inflation. It's been a lot of talk about inflation, right? So this is what I want you guys to focus on. The rule of 72 can be applied to anything that increases exponentially, such as GDP or inflation. It can also dictate the long-term effect of annual fees on an investment's growth. This estimation tool can also be used to estimate the rate of return needed for an investment to double given an investment period. For different situations, it's often better to use the rule of 69, rule of 70, or rule of 73. I've never used the rule of 69, but I'm sure many of you may have. Rule of 72, formula that is popularly used to estimate the number of years required to double the invested money at a given annual return. Okay. Now, I want you guys to think about those numbers and the effects of AI. I know Goldman Sachs put out articles last year that said that AI would increase, um, I believe, by GDP by 1.2% a year. I've seen people that have said estimates 8% a year. Right. So using the rule of 72, we can just kind of do the math on how long things would take to double, right? Based on the rate of return. So for instance, if you get 10% a year, you could have a doubling in 7.2 years, right? You get 7.2%, take you 10 years. Now, if we have the 8%, let's say we get the high end and the 8%, how long will it take for the money to double? When I say the money, the GDP, the actual value of the country. Now, we know that a lot of this value is not anything that's liquid, right? What is it? It's paper money or digital money. And a lot of times that money is just simply represented in the stock market. So a lot of these AI companies, though their earnings may be high now, in the future, those numbers will justify themselves. And that's the case people are making, right? Everything goes up over time. The other thing I want people to realize is that we have inflation. So the numbers that you see on paper are not real. What do I mean? So Nvidia can be worth $3 trillion. And the next thing you know, on paper, in 5 years, it can say $6 trillion. That $6 trillion doesn't actually mean anything if the money is worth less. So on paper, it can say 6 trillion, but still only be worth 5 trillion, 4.5. We don't know at this point. We just know that the value of our money is decreasing year after year after year. I don't remember what the actual rate is off the top of my head, but it's always typically, I guess, between 2 and 3%, right? Inflation rate, right? So that's what we're looking at. Now, the last thing I want to get into is the actual investment calculator. I expect the economy to grow. I expect those numbers to go up, and we can make the actual digital numbers in our bank account go up if AI takes over. the way many people expect that it possibly could. All right, let's get into calculator.net. This is an investment calculator. Just gonna look at some compounded returns. So we're gonna start simple, and I just want to give people a longer term view. You guys can mess with this yourself, and I always like to do this. It's pretty fun, but I always like to start with somebody um, at zero, right? So you have a baby, you have a child, got a child on the way, right? So the earlier you start, the better. So we're always going to start with the youngest, and we're going to get a baby $1,000, and then we are going to contribute $100 at the beginning of each month. We're going to do that, and we're going to look at what the return would be. We're going to look at a return of 15%. Now, the one thing, and if you followed me, you know, I kind of talk about the return for the overall market or the S&P is not the return for the best performing stocks. The best performing stocks will well outperform the S&P. Right. So if you actually pick the right stocks, then you'll well outperform the S&P, and it's not even close. As you know, we've already shown that if you pick the right stocks, you're going to outperform the S&P. Right. So we're going to be what I consider conservative and go with a rate of 15%. Right. We're going to start with $1,000, 18 years, 15 rate of return, compounded annual. We're gonna, yeah, we'll just do it annual just to make it easy. Let's just calculate it. All right. Now, I want you guys to realize what just happened here, right? So the imbalance is $110,000, right? Okay. Starting amount 1,000. Your total contributions are only 21,600. The total interest is 88,000. This is the magic of compounding interest. So you have to think when I'm putting 21,000 in, you're not doing that to get 21,000 back. That's 88,000. I'll show you some more magic. That was only while they're 18. Let's go to their 40. No, 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 no. I'm gonna have some fun. I'm not gonna go to the 40. I want to go to their 30. Okay. Remember, this is starting with 1,000 with $100 a month. Not 1,000, just $100. So from a baby born to 30 years old, the total contributions will be $36,000. The total interest paid will be $592,000. You're putting in a little bit to get a lot. How many people do you think are 30 years old with $592,000? Okay. Well, this is where it gets crazy. A 40-year-old, watch this. This is going to be mind blowing. That extra 10 years of interest. So you see how it's 98% interest, 2% contribution. Your $48,000 contribution is now $2.5 million. Think it's a bunch of 40-year-olds with $2.5 million. You didn't have to be rich to do it. You just have to do it. That's it. Now let's just say you know, I'm 18 years old, right? So I got 22 years, right? Okay. So I'm an adult. I can do whatever I want, right? So let's say now, this is what I always say. If your parent lets you live with you, this is under scenario. Because I already told my son, I was like, you can live with me. I don't care. You can work at McDonald's. It doesn't matter. And I've used this as an example plenty of times. And I'll break it down in a second. But let's say you say, okay, maybe I got to put more. Maybe instead of a pair of tennis shoes, right? Instead of those pair of Jordans, we're gonna do the same thing. Uh, after 22 years, right? Okay, let's see. 400,000. Your contribution is only 66,000. Now, let me show you an example of what I was talking about. How if somebody made $1,500 a month, right? So I told my son, you could just stay with me at home with Pop, and what you're gonna do is now you want to have the girls over and all that. I don't mind, but they got to be respectful, and you be on your own side of the house, it's whatever. But I don't mind because when the kids leave, what I'm gonna do, right? Okay, so $1,500 a month. He have a job. He's a lifeguard. He work at the beach. He don't get paid that much. So let's just say he getting paid and $3,000 a month. That's $36,000 a year. Nothing crazy. And I just say, all right, you just pay for yourself and all your stuff, and you can put $1,500 per month in investment. This is what it looks like. Right. So this is the thing. You want to start as early as possible, right? Whether it's for you, your children, and you want to put as much as possible. Now, IRAs, you can do $7,500 a year, right? So let's say you're just getting started. You're a 30-year-old, you're doing all right, and you put $7,500, right? And no, you're 30 years old. So this is what it looks like for you in 10 years. Obviously, I'm only doing this to age 40. I'm not doing it, haven't done anything past that. You're looking at $1 million, right? In 10 years. Obviously, uh, what's the retirement age? 65. You don't got to be 65 retired, but when people talk about retirement, we'll just go 65. So you're 30, and so that means 35 years over there, continuing to put 7,500. That number changes. Goes. Uh, um, then you have $82 million of so. Oh, sorry. Let me do this. Let me do this wrong. It's not $82 million. I'm sorry. It is $82 million. Oh no, that's per year. But um, let's say you can put 2,500 a month, 27 million. It's still all right. It's still all right. But yeah, you can do 7,500 per year, per year, per year, not per month. But yeah, somebody puts 2,500 per month till retirement age. You put in 1 million, you get 27 million back. You did $1,000, you get 11 million back. If you got 10%, you get 3 million back. Right? I don't know if you got 20%, right? Like it's the possibilities are endless. Uh, and you can mess with the numbers. If you got 17%, look at some of your favorite investors and see what their numbers are. You can You can see what is Warren Buffett's annual rate of return or annual return, see what it is. See if you can try to match those. If you're somebody like Simons, you might get 26%, you know, and then you end up like that. Right. So that's part of the reason why I try to make sure I'm invested in quality companies and companies that I believe have chance to be leaders in the market with a ton of upside. And then I'll make sure I get myself market exposure and then make sure the portfolio is stabilized at all times. So I hope this was fun for you. It was definitely fun for me. Let me give you just quick look at the portfolio one more time before we get out of here. Show you the moves. All-time highs. I don't know, is it still going up? I don't know. I don't know. I don't know. It's looking pretty good though. What was the high it hit? 780. Not bad. So yeah, let's look at the market or the portfolio. Added POTR. Added you. Do some due diligence on those companies, and then if you learn anything about those companies, put them in a comment below. Definitely want to interact with you guys. I know I do a lot of yapping, but I want to interact with you guys as much as possible and have a nice community of like-minded individuals and people who like to talk about stocks the same way I do. With that being said, I wish you guys nothing but the best of luck. And then if you know anybody who needs help, make sure to refer them to the channel. And again, if you want to see me on camera, just put in the comments, turn it on. Well, this is your man, Boss Gang VIP, with the new money stock portfolio. Hope you guys had a great time. I'm going to catch up with you guys next time. Make sure to like and subscribe if you haven't already. I'm out. Peace.